If you're renting in Boston and waiting for prices to drop before you buy, you're not being cautious, you're falling behind. The biggest cost isn't the price of the home, it's the years of wealth that you're not building. Boston's market isn't waiting for you to feel ready. While you're sitting on the sidelines hoping for a crash or a drastic market dip, there's other buyers out there locking themselves into homes and they're building equity, which means they're setting themselves up for long-term financial freedom. The entry point may not feel perfect, but the longer you wait, the harder the climb gets. Every year you wait in Boston isn't just another year of rent, it's potentially hundreds of thousands in lost net worth. The difference between a buyer in 2025 and one who waits until 2028, well, one is building equity and lots of options for themselves. The other one is gonna be locked out and playing catch up in a city that doesn't wait for anyone. Look, I get it. 5 years ago, I was between buying or paying $4,000 a month in rent for a 1-bedroom in Fenway, telling myself that I was being smart by waiting for the right property. And it was purely because of the stage of my life that I was in that I didn't feel like it made sense to buy at that time. But I am so grateful that I didn't wait, because that delay would have cost me $200,000 in equity that I couldn't have made up. So don't make that mistake. I'm Kimberlee Meserve. I've been a realtor for nearly a decade now, and for many years, my team and I ran the largest first-time homebuyer workshop in the Boston area. I've helped hundreds of first-time homebuyers crack the code on Boston's market. Today, I'm gonna show you exactly how to go from I can't afford Boston to having keys in your hand, even if you think it's impossible. And stick around to the end, because I'm giving you my personal list of 3 neighborhoods that I feel are about to explode in value. Places where you can still get in around $500,000. Here's the biggest lie in Boston real estate. You need $800,000 to buy anything decent. That is completely false, and it's keeping good people trapped in rental cycles forever. See, there are actually 3 Boston markets, and most people only know about one. Market number 1, this is what I call the Instagram market. This is Back Bay, the North End, the South End, Seaport even. Yes, these are $1-million condos, and this is what shows up in your Zillow searches and makes you think that you can't afford to live here. There's market number 2. This is the Opportunity Boston. Think Roslindale, Hyde Park, East Boston, parts of Dorchester. These are areas where you can buy between $400,000 to $600,000. Same city, same T access, but suddenly more affordable. And market number 3, which I call the Hidden Gem Boston. It's not everywhere in these neighborhoods, but there's parts of Mattapan, Roxbury, even other parts of Dorchester that are still developing, where you can get in around $400,000 and watch your investment grow. So let's talk about the math that everyone's afraid to do. On a typical $485,000 purchase in that price range, you're gonna build about $15,000 in equity just from your mortgage payments in year 1. Add on top of that a conservative 5% appreciation, and Boston typically appreciates more than that too. That's another $24,000 that you're adding to your net worth. That's $39,000 in wealth that you could build in year 1 alone. Meanwhile, if you're still renting, your landlord is building that $39,000 in rent off of the rent checks you're paying. So which side of that equation do you want to be on? Okay, here's one I hear commonly is that I don't have $100,000 sitting around for a down payment. And neither did 95% of my clients. This is the myth that keeps people renting for a very long time. Here's what mortgage brokers don't tell you enough. You can buy a house in Massachusetts with as little as 3%. With an FHA loan, you're looking at about 3.5% down, and a conventional loan you can do as low as 3%. If you are a veteran, thank you for your service, you actually get the benefit of having 0% down through a VA loan. And Massachusetts has some of the best first-time homebuyer programs in the country. So I want to give you an example with some numbers. On a $520,000 condo with 3% down, you would need $15,600 for the down payment, plus roughly another $8,000 in closing costs. So your cash to close is $24,000. That's all the money that you need to bring to the closing, your down payment plus your closing costs. That is totally achievable for someone making $72,000 a year if you're really committed to it and you save aggressively for 14 months. Think cutting subscriptions you don't really need, meal prepping more instead of going out or door dashing, and then maybe even thinking about getting a roommate. There's nothing wrong with that. But here's where it gets better. Mass Housing has a program that gives you up to $30,000 in down payment assistance. This is like free money for you. And then the elephant in the room that no one talks about, gift money. Your parents, grandparents, even siblings can gift you money for your down payment, and most programs allow you to do this. So let's talk about the math. If you're lucky enough to get gift payment from family, let's say you can get $10,000. You save up $8,000 yourself, and then you can get $7,000 from mass housing. Not everybody qualifies, but it's definitely worth looking in to see if you can access some of that money. Right there, we've added it up to $25,000, and you can be a homeowner. The down payment really isn't the barrier. It's honestly mindset for most people. Okay, reality check on income. I know you're thinking, I don't make enough money. So let me ask you something. How much do you make? And be really honest with yourself, not just your base salary. Because here's what counts towards your mortgage. It's your base salary, yes, but also any overtime that you've done consistently. If you have a side hustle, freelance work, you just have to show 2 years of history from this additional income. A misconception is that you need 2 years of history from your primary salary. That is actually not true. So just any additional income that comes from tips, bonuses, that has to show a 2-year history. So most people are underestimating their qualifying salary or income level. And I find that it's usually off by like 15 to 25,000 because they don't think that lenders can count those other things towards their qualifying income. So working through some numbers, a good rule of thumb, and some loan programs will allow you to go a little bit beyond this, but I don't think it's best practice. Typically, your total monthly payment, your total expenses, let's call that your debt, it can't exceed 43% of your gross income. It sounds complicated, but it's not. So let's use some real numbers here. The average household income in Massachusetts is about $140,000 a year. So that's $11,650 a month gross before taxes. 43% of that is $5,000. So your mortgage payment plus your car payment, student loans, any consistent monthly debt that you have, credit card payments too, can't exceed $5,000 total. So if you have no debt at all, you can qualify for a $5,000 a month mortgage payment. At that income level, usually most people are around $4,200 to $4,500 a month, which gets you in the $600,000 to $700,000 house range, depending on how much you put down and what the taxes on the property are. So if you're close but not quite there, one thing a lot of people need to focus on is just paying down credit cards first. Eliminating monthly payment on credit card can often lead to another $20,000 in budget towards purchasing the house. The income barrier really isn't as high as you might think. And in a city where we have so many software engineers, doctors, teachers, city workers, all living there, there are loan programs available for every income level. All right, so you have the money part figured out. Now, where should you actually buy? Forget everything you think you know about good and bad neighborhoods. I'm about to show you how to think like an investor, not just a buyer. So let's break this down into a 3-tier strategy. Tier 1, we're gonna call this Somerville, Cambridge, parts of Charlestown. These are expensive areas, but stable. If you can afford them, great. But you're paying a premium for being in these locations now. Tier 2, this is really a sweet spot right now. Roslindale, Hyde Park, East Boston, Malden, Medford. You get way more house for your money. You're still on the T, and these areas are appreciating super fast. And then there's Tier 3. These are value plays. Mattapan, parts of Roxbury, Dorchester, some areas of Lynn. Think higher risk, highest reward. But if you pick these right, this is where you can really build serious wealth. You want to look for the areas that are experiencing a big change and development. Let me give you a real example. A property that was bought in East Boston 3 years ago for $415,000, well, comps are now selling for $580,000. So that's $165,000 in equity in just 3 years of owning. So here's how you spot the next neighborhood. It's gonna sound a little cliche, but look for where young professionals are moving in, new coffee shops popping up. Look where there's a lot of construction going on. This is where often there's a lot of value being created. Don't buy necessarily where you want to live right now, buy where you want to build wealth, because you can always move later, but you have so many more options if you get in the game first, instead of trying to just save up all that money for your ideal property. So before we dive into the mortgage process, if this video is opening your eyes to what's actually possible in Boston real estate, do me a favor, hit that like button and subscribe. It tells YouTube to show this to more people who might need to hear this message. And if you want my personal help navigating the Boston market, I've put a link below with our contact information to schedule a free consultation with our team. Okay, let's talk about actually getting the money. And please don't make this mistake. Don't fall in love with the house and then try to get qualified for a mortgage. That is completely backwards. And in Boston's market, that is how you are going to lose every house you want. So step one, you have to get pre-approved. Not pre-qualified. I'm not talking, I went on Rocket Mortgage, put a little bit of information about myself, and they said I could buy a $700,000 house. You have to go through the pre-approval process, and there is a big difference. Pre-qualified is basically the lender saying, yeah, you seem fine. Pre-approved means that they've checked everything and you are ready to buy. Unless you mess something up or didn't share something with them, you're gonna get that money for the mortgage. And if you really wanna take it a step further, get pre-committed. Not every lender offers this, but a good agent can recommend you to a lender who does, and my team and I are happy to make that kind of introduction. A pre-commitment allows you to waive the financing contingency in your offer and can make you as strong as a cash buyer because of the extra steps that you're taking ahead of time. Plus, it doesn't cost you anything, and it's the same amount of work that you would do anyways. You're just doing it up front, not during the transaction, which is actually less stressful. So with that pre-approval letter or pre-commitment letter, you're not just a browser, you're a real serious buyer. Sellers will take you seriously, agents will return your calls. Step two, focus on finding the right lender, not chasing rates. Here's the thing about rates. What they actually quote you today is not what you'll actually get. It's what your rate would be today if you got an offer accepted in that moment, but rates change, things happen. Your real rate gets locked in once you have an accepted offer, and you still have a period of time to shop around from there. So instead of rate shopping, focus on lender shopping. You want someone who can close fast, knows the market locally, and won't create problems during the transaction, because a lot of times deals fall apart because of a problematic lender, and it has nothing to do with the buyer's ability to qualify. Are rates higher than they were in 2021? Yes, but historically high? No. We're in normal territory. And here's the thing about rates. You can always refinance later, but you can't go back in time and purchase at today's prices. Here's what's possible. Because there are less buyers in the game right now, we're seeing clients find amazing opportunities in the market where they're walking into the property with instant equity. We just had a buyer lock in and get $50,000 in instant equity when they close on that home. Now, here's where it gets real. Boston's market is competitive, but it's not impossible. You need to be smarter, not richer. First rule, be ready to move fast. I mean same day fast. Some houses are selling within days. Many times the good ones do have an offer deadline, which gives you a little breathing room, but acting early gives you time to prepare for a competitive offer. You need three things: competitive price, clean terms, and proof you can close. Competitive price doesn't always mean highest price. Sometimes the seller cares more about a sure thing than an extra $10,000. Clean terms means minimal contingencies. Maybe you keep the inspection but increase the negotiation terms and waive the financing contingency if you're solid on financing commitment. A good agent will help you put together a great strategy. Timing matters too. Everybody looks on weekends. See if you can look on weekday evenings. You have less competition. Sometimes you have an opportunity to put in a strong, quick offer and try to get the seller to take it before the weekend. Or if they're really sticking to that offer deadline, at least you've seen it and you have an opportunity to bring back a second opinion, a family member, a home inspector, to be really sure that you're in a position to put in a super competitive offer. There's also a weapon that most buyers don't know about called escalation clauses. Think about it this way: you offer $480,000 with an escalation clause up to $510,000, meaning that you're basically auto bidding against other offers up to your max. It doesn't work every time. Some listing agents won't even allow them, but it's always worth asking. But please don't get emotional and bid way over your budget. I've seen people win houses that they couldn't really afford, and then they end up backing out, and it's not winning. You're just wasting everybody's time and maybe breaking your heart. Here's a strategy that wins offers. Be flexible on closing dates. If the seller needs 60 days, give them 60 days. If they want to close in 3 weeks, it's great to be working with a lender that can do that timeline. Not every lender can. This flexibility has won a lot of offers for our clients without them paying more money. And you need to be competitive in your appraisal. Sometimes that means that you're guaranteeing that you'll make up the difference between appraised value and the purchase price if the appraisal comes in low. This usually happens in really competitive situations, and a good lender can work through options so that you're not having to come up with more cash out of your pocket. So congratulations, you got your offer accepted. Now don't screw up the final 30 days. Here's what happens. Week 1, you get your inspection done. It's not about finding the perfect house, it's about finding any major problems, structural and safety concerns. That 1970s electric panel, well, it's not ideal, but it's not a deal breaker if the price is right. Your attorney will also start working on the purchase and sale agreement, which usually gets signed within the first 7 to 10 days. Weeks 2 and 3 until the end, it's your lender doing their thing. It can feel a little bit slower than the rush in the beginning, but you're doing the appraisal, they're sending you through underwriting, basically making sure that everything you told them was true. And if you already did that pre-commitment, you don't have to worry about doing all that work after. Do not, and I cannot stress enough, do not make any major financial changes while you're under contract. Don't buy a car, don't open a new credit card, don't change jobs. They are watching everything. You'll want to plan for closing costs of about 2 to 3% of the home price. So on a $500,000 home, that's about $10,000 to $15,000 on top of your down payment. Most of this you'll know ahead of time. A good lender will walk you through the whole cash to close, but you want to make sure you're budgeting for surprises. And then the day before closing or the morning of, you do your final walkthrough. The goal is to make sure nothing's broken since the last time you saw it. And I've had buyers who went to the final walkthrough and we discovered that there was a massive hole in the wall that the seller had been trying to hide. We want to just make sure there aren't any surprises before you sign everything. And then you sign the closing documents, and once it goes on record, you get the keys. You own the home. And you did something that most people say is impossible. But buying the right house isn't just the beginning. Now let's talk about building serious wealth. Every mortgage payment has 2 parts. Interest and principal. That principal portion, well, that's money going into your pocket. On a typical $500,000 mortgage, you're building about $1,000 in equity every single month in the beginning just from payments. So add in Boston's average appreciation of 4 to 6% year over year, you're looking at about $20,000 to $30,000 in appreciation annually. That's wealth being built. So do the math. $12,000 in principal payments plus $25,000 in appreciation means $37,000 in wealth building in just the first year alone. And you're living there. You already need a roof over your head anyways. Why not have that wealth be yours instead of your landlord? I'm gonna give you a tip on how to accelerate it too. It's something called house hacking. Buy a 2-bedroom place, rent out a room for $800, $1,200, $1,400 a month. That's another $10,000 to $15,000 a year towards your mortgage. And then if you make strategic improvements like a kitchen renovation, you're talking $30,000 to $50,000 more in value. Look for opportunities where you can add a bathroom, finish a basement. That's all value that you're adding to that property. Here's where the real wealth building happens. In 5 to 7 years, you can use your equity to buy an investment property or the next home that you live in. Now you own 2 properties, you're building wealth, then 3, and that's how regular people become wealthy in expensive cities. So let me show you 2 paths. Path A. You keep renting for the next 10 years. You'll pay about $420,000 in rent and own nothing. Path B, you buy today. In 10 years, you'll have paid $400,000 towards your mortgage, but you'll own a property worth potentially $700,000 to $800,000, and that's $300,000 to $400,000 that you've created just by living somewhere. So which path do you want to be on? Thinking about relocating to Boston? Well, I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research. And I've linked it down below, from top employers to best hospitals and a boatload of other things that you need to know before making the move. The best part is that it's 100% free. That's right, you heard me, 100% free. Just click the link in the description or the top pinned comment. Hope that helps. Here's the truth that no one wants to tell you. There is no perfect time to buy real estate. There are only expensive times to wait. So while you're sitting there analyzing every market report, waiting for prices to drop, someone else is building equity in the house that you'll want to buy next year. It's going to be $50,000 more. So your homework, and I'm very serious about this, is to get in touch with a lender. Start that pre-approval process because you can't make any great decision until you have all the information, and a lender is going to walk you through your situation and your buying power. The difference between renters and homeowners isn't income and it's not luck, it's truly mindset. Renters wait for permission, homeowners create opportunity. You made it to the end, which already puts you way ahead of most buyers. You're not just dreaming of owning in Boston, but you actually have the steps on how to to make it happen. So here's what I would say do next. Like I said, get pre-approved. This is the fastest way to move from a maybe to I'm ready. And if you're serious about buying in the next 6 to 12 months, let's book a strategy call. It's no commitment, no pressure, but I'll help you break down your numbers, timeline, neighborhood options, and put a plan in place so that you can move forward with confidence. Feel free to reach out to us at info@streetpropertyteam.com. Boston's market isn't easy, I know, but it is possible and you don't have to do it alone. The biggest difference between renters and owners isn't income, it's strategy, and that's what you just started building. So let's get you home. If you found value in this video, click here to watch the next one. It's all about the best 5 neighborhoods in Boston, and I'll see you over there.